Hi, thank you for joining us at Tax Talk UK. We're going to have a look at national insurance. Before we get on to that, if I could please ask that you take a moment to subscribe to our channel and turn on all the notifications. That way you'll easily be able to refer back to this information if you need to, as well as finding the other information that we have available for you and to be notified of new information as we upload it. Thank you. So back on to national insurance. So once you reach 16 and earn above the relevant thresholds in place at the time, you will need to pay national insurance contributions on your earnings. And these contributions will qualify you for your state pension, as well as certain state benefits. In the description below, I'm going to put a link where you can find out the different benefits that are qualified by the different types of national insurance. So every tax year that you pay national insurance contributions for is known as a qualifying year. Once you have 35 qualifying years, that will entitle you to full state pension. If you have less than 10 qualifying years, then you won't get any state pension, you won't be eligible, and anything in between you will receive a proportion. So 35 years gets you the full state pension. And if, for example, you have 19 qualifying years, then you will get 19 35ths of your pension when you reach retirement age. If you're not able to work because of illness or you're caring for someone, including your own young children, then you may be eligible to get a credit for national insurance for that year in order that it becomes a qualifying year. At any time you can get a pension forecast, which will tell you how many qualifying years that you have and what state pension you're forecast to receive. And also through your personal tax account on gov.uk, you can also access your national insurance record on there. So even if pension age is a long way off for you, it is important to have an understanding of how many qualifying years you have at this point in time and how many more years you intend to work, so you can actually have an understanding of whether you're likely to have enough qualifying years to receive the full state pension and what you need to do about it. For example, making up any missed years, or perhaps considering working longer than you planned, if having the full state pension is important to you. So when we talked about income tax, you'll remember how we talked about that's a cumulative tax, i.e. all of your sources of income are all added together, and that is how your liability is determined. So unlike income tax, national insurance is due per source of employment and per pay period, once that pay period meets the relevant threshold. So if you have more than one source of income, it's completely plausible that you would have to pay national insurance on more than one source of income. But of course, that also works the other way. If you had more than one source of income, but that meant that you didn't meet the threshold in either, then you wouldn't have to pay national insurance, but then you wouldn't get your qualifying year. So it's important to understand that national insurance in that respect is entirely different in its operation and liability to income tax. And similarly, if you only had one source of income and perhaps you were just under the national insurance threshold, or quite substantially under it, but in one pay period you had a bonus, for example, then regardless of where you sit in regards to the threshold for the whole the whole year, that one pay period would be liable for national insurance. So it could be with national insurance that you could be liable some pay periods. So if you get paid weekly, one week you may be, and another week you may not be. It's not cumulative in the same way as national insurance, if that's clear to understand. So there's different kinds of national insurance, and each different type of national insurance it's known as a different class of national insurance. And if you're employed, which would mean that you would pay class 1 national insurance, then your employer would also be paying employers' national insurance contribution. So just a quick run through then the different types of, the different classes of national insurance and who pays which class, to give you an understanding of which class of national insurance you should be paying for your own income. Class 1 national insurance then is due on employed income. If you're an employee, then your employer will deduct this automatically from your pay with your income tax and any pension liabilities, assuming that you're over the threshold for that pay period. And currently, if you're under state pension, if you're over state pension age, you don't pay national insurance. If you're under, then you do. Just to mention, if you're over, then employers' national insurance would still be due from your employer. Class 1A and 1B national insurance are actually due, and that's a liability direct to the employer, and that is due on certain benefits that they may pay to their employees. So class 2 national insurance are for self-employed people earning over the relevant threshold for the year, and it's a set amount. So it's currently around about £150 for the year. It historically it used to be charged weekly, where you could pay it weekly, quarterly, monthly, and it was paid separately, often by direct debit, direct to the Department for Work and Pensions. Now class 2 national insurance is assessed within your self-assessment tax return, and so therefore the liability is included on there. So that does make things simpler to actually keep on track of where you are with your liability and what is due. Jumping to class 4 national insurance, again for the self-employed, and this is a percentage based. So over the threshold for class 4 national insurance, you will pay a certain percentage on all of your profits at the relevant band and the in between the relevant threshold at a set percentage. So that will be very much determined by your actual profits for your self-employment, as opposed to class 2, which is a fixed weekly value. And then back to class 3 national insurance, this is a voluntary contribution. So we talked about earlier about how many qualifying years that you need to be eligible for your full state pension. So if you've got any gaps and you want to fill those and pay to have those as qualifying years, then it would be class 3 national insurance. And again, there's rules on how far back you can fill in your gaps and how much it will cost you. So it's important to always have a handle on how many qualifying years you have, how many you think that you may be working for still, to ensure that you don't leave it till the last minute, and which could obviously be an expensive oversight if you're expecting to have full state pension and then you all of a sudden get to pension age and realize that you haven't, and you've left it too late to pay voluntary contributions to fill in the gaps. So in the description, I'm going to pop the links where you can find out the actual rates and the thresholds for each of the different classes of national insurance. So then from that overview, hopefully you've now got an understanding of what class of national insurance you'll be liable for, and you can actually find out the current thresholds, so you know at what rate of pay it will be, it will kick in, and how much that will be, which is all percentage based, apart from class 2, which, as we talked about, is just a fixed rate. So hopefully, again, just a very brief overview on national insurance. Hopefully this has helped your understanding of this. And as I mentioned earlier, if I could just remind you, if you haven't already, please do subscribe to our channel. And I hope that this helps you. Thank you for watching. Goodbye.